forecast for ForexTraders. Total trading from June 26 to July 1 resulted in a gain of plus 45.22 USD. The week started with a move towards a stronger yen after Finance Minister Kanda made statements suggesting a carbonian depreciation. This'll to selling off USD/JP a pair book contrary to expectations. The trend pushed to tintant 145 yen range, triggering the majority flows. Subsequently, the market focus shifted to Consumer Price Index (CPI) in Canada, which hit a low of 3.4%. Fellow West since June 2021. This resulted in accelerated selling off Canadian dollar, by switching to trading strategy centered in selling the Canadian dollar, we managed to end through it with a profit. In countries such as Japan, there have been rapid interest rate hikes, and inflation appears to be gradually slowing. Looking ahead, we expect to see more currencies being sold as inflation slows down. If we can read this trend well, we will Lakito increase your profits. Key points to watch for the week starting July 3 are: keep an eye on US employment data for June. The USD/JP will be assessing June's employment figures and ISM. Manufacturing/non-manufacturing business activity indices to get the possibility of additional rate hikes at the Federal Open Market Committee, FOMC, meeting in July 25-26. June's employment data is expected to show an unemployment rate of 3.6%, an improvement from May's 3.7%, and non-farm employment is expected to increase by 213,000 from the previous month, a slower pace of increase than May's 339,000. In addition to these figures, we'll also watching average hourly earnings in the employment statistics, as well as employment and price indices in the SM manufacturing/non-manufacturing business activity indices for June, depending on these numbers. We may see the possibility of a hawkish ski propose at July FOMC, 4th meet in January. Source: Traders Web. It's an important tweak with key figures that will help gauge a hike in July. We anticipate a week where the USD will make key significant moves. We plan toward a trend after scrutinizing the numbers. Australia's may see a respectus than expected, easing pressure for rate hikes. Australia's Consumer Price Index (CPI) rose 5.6% year-on-year in May, below economists' expectations of 6.1%, according to the Australian Bureau of Statistics. The slower than expected slowdown in inflation from April as 6.8% cold provideth Reserve Bank of Australia to reason to halt the interest rate hikes it has been carrying out since last May, at its next Paula meeting July 4. Source: Bloomberg. Weary shifting to selling position on the UD. P.S. These week we note an interesting story about Bank of Japan Governor Ueda, who reportedly made a series of jokes at the CB forum. Butupin watching the actual discussion, it seemed less like he was joking and more like he was simply speaking his mind, which was perhaps perceived positively because most people didn't usually speak so candidly. One comment hat drumdia and Shanaza Jokwashi attribution of iron depreciation to the interest rate hikes by the central banks of U.S.U.K. and Europe, but this is far from a joke and is in fact quite true. The strength or weakness of a currency often depends on a comparison with other currencies. YTU.S. Dollar, Euro, and British Pound undergo an aggressive rate hikes to curb inflation. The Japanese yen, which is using monetary policy, is inevitably heading towards depreciation, no matter what it does.